In this presentation, we will record receive payment forms within QuickBooks Pro 2020, QuickBooks Desktop 2020. In other words, we have entered invoices in a prior section of the course, a prior presentation. This time we're going to record the receive payments related to the invoices that we have created. The invoices we had created increased accounts receivable, increased sales. The receive payment will increase some form of deposit, some form of cash, undeposited funds. In our case, decrease the receivable. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by going to the view drop down up top and selecting the open windows. We're going to be in the home tab. Within the home tab, we're going to be in the customers section. Now, within the customers section, we will be concentrating in on the receive payments. As you can see from the flowchart, the receive payment is going to be what will happen typically after we have an invoice. So we'll have an invoice, then we will receive payment. We entered an invoice in a prior presentation. The invoice to us is basically a bill to somebody else. They receive our invoice, it's a bill to them. To us, it's going to be an invoice that we record revenue and accounts receivable. In other words, in our example, we sell guitars. We had sold a guitar, but have not yet received payment for it, therefore created an invoice, which increased what we're focusing in on here, the accounts receivable, people owing us money. We expect to receive a check in the mail, the other side going to revenue. Now we are imagining that we did receive that check in the mail, and therefore taking the second step, we're imagining now we opened up our mail. Here's a check that we got from Anderson Guitars for the invoice that we had sent to them in the past. That's great. We're happy about that. We like when we get checks and money. Therefore, we're going to record the receive payment. The receive payment will then decrease the receivable that was owed to us with the invoice, and it will record some type of receipt of cash. However, this cash that we receive will be increasing an undeposited fund, which is the default for QuickBooks. The reason being because we might have multiple types of cash that we received throughout the time period that we would want to then group together and deposit in the same format as we would be seeing on the bank statement to help us with the bank's reconciliation. You could change that. You could make this to deposit directly into your checking account. Just be careful when you do so that you're not making the bank reconciliation process more difficult by having the deposit that will be recorded on the bank statement look different than the grouping of those deposits that will be reported as you enter the stuff into your system. Let's take a look at this with the reports first. I'm going to go to the major reports. Reports up top, company financial, starting with our balance sheet, going to the balance sheet standard. We're going to change the dates. Let's do that with the customized reports so we can have a range, the range of 01/01/20, 12/31/20, the year we will be working in on 2020. So here's going to be our balance sheet. Let's then go to the reports up top, open up our other favorite report, that being the P&L, the profit and loss, which is basically the income statement, dates of 01/01/20, 12/31/20. And next, we're going to be opening up the trial balance. Reports drop down. We're going to go then to the accounting and taxes trial balance and changing the dates from 01/01/20 to 12/31/20. There is our trial balance. Now, considering this, if we look at the balance sheet, I'm going to go back to the open windows. The checking account, then you would think that the checking account would be going up if you have a receive payment, right? But it's not going to go up yet because instead we're going to put it into an undeposited fund, which is in essence a holding account. I would think of it as a cash account because when you have something in undeposited funds, it represents you holding onto a check, which has not yet made it to the bank. And again, the reason for that is so that we then group the checks and deposit them in the same format in the bank as will be seen when we do the bank reconciliation in our books, so we can reconcile really easily. That's the hope. So we want to keep that. That's what's going to happen on the balance sheet, and the receivables then will be decreasing. That's going to be the transaction that will happen. Nothing's going to happen on the P&L. Why? Because we already recorded the revenue in the past. The revenue is already here. So we're not recording revenue again, even though we receive payment, because this isn't a cash basis, it's an accrual basis. We already did the work, we delivered the guitar, and recorded the revenue at the point when we sent the invoice, because that's close to the point when we did the work delivering the guitar. If we look at the trial balance, maybe cleaner to see, we could see that the accounts receivable is going to go down. Undeposited funds not here yet because we haven't used it yet. Let's then go to the home and see if this does what we would expect it to do. We will then go to the receive payments, and we're going to receive payment from Anderson, which we made an invoice for in the prior section. If I select the drop down, we see Anderson here, or we can just simply type it in and it'll populate for us. As it does so, I'm going to select tab and it'll populate that information. We're going to say the amount is 5,000. Now you could type in 5,000. However, you see down here that it's populating the invoices for us already. It's saying, hey, Anderson owes you money. Why? Because you billed them or invoiced them in the past. Down below are the invoices that you have sent out related to Anderson. Are one of these related to the invoice that you received? We're going to say, yes, we received this 5,000. So we'll check that off. So if you don't enter an amount, QuickBooks automatically calculates the amount as you select the invoice. So I'm going to say, okay, and it populates the 5,000 for us. Now, if they didn't pay us the full 5,000, we can put something other than 5,000 here, and then the invoice would still be open, not fully paid. We here are going to say it's going to be fully paid. Now we can select the amount of payment that we have, the payment method. I'm just going to select cash, or let's select a check that we got a check. Now if I select cash, we have a reference number, check number, credit card information, and so on. So if I select check, we have a check number here. It's not required for us to enter the check number in order to populate this, to complete the customer receipt. However, it's nice, it's good practice to do so. So there we have that, and we chose this invoice. The amount due was 5,000. The amount applied, the amount of payment that we received, in other words, the amount due to us from Anderson, the customer who we sold our guitar to, 5,000. The amount that we applied out because we received it by check in the mail, 5,000. Therefore, nothing else is due on this particular invoice. However, we have this other one that is still open that we have not applied anything to as of yet. Now, note that what does this transaction do? There will be what accounts will be affected with this transaction. We already discussed them to a bit. Note, however, when you see customer payment, it'll default to an account. You don't see the account. It's less clear kind of here. You would think it would go into maybe the checking account, but we put it into the undeposited funds, which is the default standard setup. So this customer payment then will mean that it's going to be going into the undeposited funds account will be increasing. The other side is going to be applied to the invoice here, which means accounts receivable will be going down. Now you might say, hey, I don't like this setup. I don't want it to go to undeposited funds. I'd like to remove that. I do recommend keeping it as the default because it will help you to match up the deposits properly. But if you don't want to do that and you want to just say, hey, I want to deposit directly into the checking account from this step, you can go to the Edit tab. It's in Preferences down below. And then you want to be on the Payments on the left side. You want to go to the Company Preferences. And then it says here, use undeposited funds as the default deposit to account. So that's going to be the default. You would uncheck that to make that not the default. We're going to keep the default setting here, and it really is a best practice to use, although it can confuse people, especially when you're going from financial accounting to using software, because in financial accounting, oftentimes when we record transactions to cash, we don't specify the checking account or grouping those deposits together. In practice, of course, we want to do those. It'll help us to reconcile. So that's going to be the transaction. We're going to say save and close. And then we'll see what happens in our financial statements. If we take a look at the balance sheet, we go into the checking account, nothing in the checking account. Remember, even though we received cash, it went into undeposited fund. You would think undeposited funds would be a form of cash up here, but really it's in other assets because QuickBooks doesn't need to track it, kind of like a checking account. So it's really a form of cash because you're imagining we're holding onto a check for $5,000 right now. So it's down here in undeposited fund. If we double click on that, we're then going to double click on this and we get to our customer payment. Closing this back out. The other side then going to accounts receivable. If we double click accounts receivable, it will be decreasing by the 5,000 as we see here in Anderson. So, and that goes to our customer payment. Closing this back out. This accounts receivable then should be supported by the documentation, another form by who owes us that money. Go into reports up top, customer and receivable, then go into the customer balance detail. We'll then see the information by customer. We see the 5,000 was the beginning balance that we set up, and now we receive the payment. That's what we would expect to see in customer balance detail. We invoice, and we see the invoice, then we get the payment, increase, and then a decrease. That's what the pattern we would hope to see in this report if it's done well, and hopefully if we have people that are paying us for the work we're doing. So there we have that. Now the next thing we expect to happen is we go to the bank at the end of the day. We deposit this along with any other deposits we get at that time period, decrease undeposited funds, put it into the checking account. Is there anything happening to the P&L? Nothing happening to the P&L because we recorded the information in the prior time period related to the income at the point in time we did the work with regards or in accordance with the revenue recognition principle. Let's do it again. Back to the home tab. We're going to then go to the receive payment. Invoice has been done. This one for Jones Guitars. We're now going to receive payment for Jones Guitars. We can select the drop down and see Jones, or we can just type in Jones, which is probably faster over time. We're then going to put in the amount, or you can select the invoice. This is the invoice amount down below. We're going to select that, and it will then populate the 7,000. I don't want this to come up again. I'm going to say check that off. And yes, there's the 7,500. Once again, we're going to say that we got paid the entire amount. Now, if you wanted to see the invoice with that 7,500 in it, you can simply double click on this field, double click on, say, the date, and that'll take you to the invoice. Here's the invoice that's being tied out to it, the 7,500 that we invoiced Jones for. They bought a guitar, we invoiced them, they had not yet paid us. We expect to receive the money in the mail. We have now received the money in the mail. There's the 7,500. That's going to be the full amount of the invoice, the full amount that we have gotten paid as well. So we're going to go ahead and save and close. Before we do though, just remember, customer payment, what does it mean? It means undeposited funds going to go up. The other side is going to be the accounts receivable going down. Let's go save and close. Let's go back to the balance sheet and we'll see this happening. We got the accounts receivable, double clicking on the receivable. It then should be going down. This one by the Jones, 7,500. Closing this back out. The other side then going into the undeposited funds. Selecting the undeposited funds, we have the 7,500. So now you'll see within undeposited funds, we have two items in there. When we go to the bank, we'll probably combine them together and deposit them as one deposit, which will then show up possibly on the bank statement as one deposit. If that's the case, whatever format it shows up on the bank statement, we would like to reflect that grouping as well on the books so that when we do the bank reconciliation, it'll be really easy for us to tick and tie matching out our books to the bank statement. We're going to do this one more time. So we're going to go back to the home tab. We're going to make another receive payment. This one for Smith Guitars. So we're going to say receive payment. Selecting the drop down. We should always have the customer here and not need to add the customer typically because this form is only usually used when we already have the invoice. So if I type in Smith Guitars, it should show up. And we would expect there to be an invoice related to it as it's populated down below. I'm going to go ahead and select that invoice. That will then populate the payment amount. We will once again say that the full payment was received. If a partial payment had been received, we can put the partial payment here. It would then still have an amount remaining due down below. And that's going to keep the payment method. And we're going to save that and say save and close once again. Checking that out, we're going to go back to the balance sheet. We're going to say that within the accounts receivable, we now have the decrease from Smith Guitars for the 8,000 that we have now received a payment for. Closing that back out. The other side then going to the undeposited funds. Double clicking on that, we have 3 items in undeposited funds. Total of the 20,800. Again, when we go to the bank, we would group them possibly with that one deposit. And therefore, when we deposit this into the system using the home tab and the deposit, we can deposit them grouped together so they record in the checking account in one grouping. And I'm going to go back here, close this out. I'm going to go back to the balance sheet. So those are going to be the two sides of the transactions. If we go then to the reports up top, we go to the customers and receivables and the customer balance detail. Then we could see the detail of these items too. We have the payment here for the Anderson, payment for Jones. We have the payment for Smith. That's going to be the typical thing that we would see. Here's the invoice. here's the payment. Goes up, goes down. So here's what we have in the balance sheet right now. If you want to go through and just check it out, make sure that everything's tying out as we go. If it doesn't, check the dates. And then you can also then go in and check the detail within each of these accounts. In the profit and loss, this is what we have thus far. And if you want to see this a bit more easily in the trial balance, this is what we have so far.